Life settlements from Current and Abrams Insurance Services. We fund lifeinsurance.com. Life settlements. If you're 70 or older and have a life insurance policy of over $250,000 that's no longer necessary, you may be a candidate for a life settlement. A life settlement is where you would sell your life insurance policy to a third party for cash today. Who's buying these policies? These policies are usually purchased or funded by large hedge funds like Warren Buffett's Berkshire Hathaway, GE, Goldman Sachs, and others. These funds have paid out over $10 billion in funding in the last few years. What are some of the reasons people would sell their life insurance? Well, maybe you no longer wish to pay for the premiums for these policies, or you no longer need the death benefit. You can sell your life insurance policy and raise a substantial amount of money. Maybe you're divorced, or your spouse has died and the intended beneficiary has changed, or you need to pay for expensive health care or long-term care. Maybe you want to eliminate premiums and purchase a smaller policy, or you want to salvage a lapsing policy, or maybe you just want financial security today. To qualify for this, in general, you either need to be a male over 70 or a female over 75. You need to have a life insurance policy over $250,000 and it needs to be in force for over 2 years. The annual premiums or the cost of these policies should be less than 10% of the face value of that policy, and the surrender value should be less than 40% of the death benefit of that policy. Now, what happens should you elect to sell that policy? Well, first of all, no money or policies changes hands until a funding company bids on that policy and the client agrees to sell that policy. Now, once that policy is sold, the client still has 3 days to change their mind. So, what happens behind the scenes? Behind the scenes, the agent's going to get an intake form listing all the policy information, all the medical history, all the doctors. It also is going to get an authorization form authorizing the agent to get all the medical records from the doctor and all the policy information from the insurance company. Now, simultaneously, the agent is going to send that information to the funders, and the funder is going to do a rigorous review of the policy to determine if the combination of the premiums due, the cash value, and the death benefit all fall within the parameters. Also, simultaneously, they're going to send all the medical records to a life expectancy company. Those medical records are going to go to a third party that does assessment company that does a life expectancy evaluation to determine the life expectancy of the insured. Now, there is a cost associated with all of this. However, all of this costs the client nothing. There is no cost to the client. Now, if there's an offer, if approved, the client was presented with an offer and an agreement will be made. The money then goes into an escrow account until the policy is transferred. Once the policy changes hands, then the money is released. It really is a win-win-win situation. If approved, then the client earns more money than they otherwise would if the policy would lapse. The funders get a policy that would likely give the fund a positive return on their investment, and the insurance carrier continues to get the premium for a policy that would otherwise cancel. That's a win-win-win. This is Life Settlements. We're Current and Abrams Insurance Services. We fund lifeinsurance.com.